Hey everybody, welcome to Zach's Live Trader. I'm Dave Bartosiak, and today we're talking about Darden, the restaurant chain that owns those fabulous restaurants that we love hanging out, going to Olive Garden, Longhorn, and I feel like they own Red Lobster too. Are they a Red Lobster thing? I don't know. Anyway, Darden. So they're going to be reporting before the market opens on Tuesday. So that's why we're doing it today on Friday, so that you have the rest of the trading day today. And then you also have Monday's trading day to take a look at the possible, trade setup here on shares of Darden before they go ahead and report for us before that market open on Tuesday. I believe it's October 4th. Right? So as always, we're going to take a look at the price consensus and EPS surprise chart here on Zacks.com. Then we're going to take a look at the detailed estimates page and see what other analysts have been saying about Darden. And last comes the fun part. That's where we dig into the options chain and I give you a bullish trade, a bearish trade, and my humble bearded opinion as to which one I think is going to pan out the best. So for everybody on Zach's Live Trader, a little bit of housekeeping here, guys. After this video, I'm going to go ahead and do a quick follow-up video to the trades that we put on earlier in the week that we were looking at. So that would include Nike, BlackBerry, Pepsi, and Costco. So want to touch base with all you on that. And I think this is something that we're going to do pretty much every week. We're going to do it on, I think we're going to do Thursday after the close so that you're all set up on Friday. You know what you're looking at because options expire on Friday. Now, granted, we don't have anything expiring tomorrow, I don't think. So we're just going to get set up there. But you can check it out. Send an email to livetrader@zacks.com. If you're not already hooked up with us here on Zach's Live Trader, make sure you shoot me that email. Again, livetrader@zacks.com. Get on the list. That way you'll know when these live events are happening, not just the ones that are in the premium channel, which does happen once a week, but also the ones that are on our free channel with Zach's. And then, of course, the only way that you can get the information on those trades that we've put on the follow-up is to be members of Zach's Live Trader. And it's cheap, $9.99 a month. It's, a couple of lattes, folks. So I hope, obviously, that you all make that back and then some. Now, today I'm going to do a little bit of educational stuff here, okay? The reason being is I got some feedback from you guys, and we had some questions on specifically what these call spreads are, what these put spreads are, what's happening. So I wanted to clarify that for, some of the confusion that's out there, kind of tell you a little bit more details on these trades. So we're definitely going to do that today. But first, let's dig into Darden. So let's take a look at Zacks.com and see our Darden thing. So now we're going to look at the price consensus and EPS surprise chart here for shares of Darden. The black line represents the price, and the right y-axis corresponds to that price. So we could see the trip that Darden's taken throughout the years and how it's kind of settled here around $60 the last several quarters. These multicolored lines represent the evolution of our Zach's consensus estimate over time. One thing I want to point out here on Darden, though, is they had a spinoff of their real estate assets into a separate publicly traded REIT, Four Corners Property Trust. So when you're seeing this dip here in the EPS, that's got a little something to do with it, okay? So don't go freaking out when you see this on Darden. But recently, pretty much sideways. And now here you see the green colored arrows to the upside. Those are earnings beats. The red arrows to the downside are earnings misses. And if you notice, we've got a string of 1, 2, 3, 4, 5, 6, 7, 8 beats in a row. Okay, so setting up for Darden here. And then we've got the growth numbers in the EPS going from fiscal year 2016 to 2017. Now, where is that growth going to be coming from here for shares of Darden? Some of it's going to be through acquiring new restaurants in the future, right? Because if you look at their same store sales numbers or same restaurant sales, right now the street, I believe, is looking 1.5% on Olive Garden, right? Soup, salad, and breadsticks. That's a lot, soup, salad, and breadsticks. And then we're looking at Longhorn. People are looking for 1.5% for Longhorn restaurants. So if you're looking for growth in shares of Darden, you know, you're going to need them to expand their footprint and add some new restaurants. Maybe not restaurant brands, but actual physical locations of the brands that they already have in their existing portfolio. So growth, that's where the growth's going to come from the expansion there, not necessarily just making it at the existing restaurants, okay? Granted, there has been a huge trend in these restaurants, which may have faded a little bit. You know, last year, things were great over there as we realized that, hey, when millennials get a few bucks, they're not going to go out and buy a house. They're going to go to Olive Garden for the soup, salad, and breadsticks, right? But it's the thing, kind of sort of generationally, people are going more towards experiences, so they're spending more on going out to eat, they're spending more on vacations, things like that, versus buying shiny cars and watches and things like that, okay? So that's kind of where this sort of demographic shift is taking the market. That's why we saw restaurants do so well in the run-up to this year, but so far this year, meh. Especially over the last few months here, we've kind of gone sideways on a lot of this. And Darden certainly is one of those restaurants that's pretty much just gone sideways here, okay? So now let's take a look at the detailed estimates page here on Zacks to see what other people have to say about Darden. So we've got it as a Zacks rank number 3 hold right now. Value style score of A, growth of A, momentum of B with a VGM score of A. Again, they're going to report before the market opens on the 4th of October. That's right, folks. October's here. Ready or not. Why are they a 3? So over the course of the last 30 days, one analyst has increased their earnings estimate for Darden. So they think they're going to make more money than they did before. And if you look at the last 60 days, there has been one analyst that has dropped their earnings estimate. Now, if you look at next quarter's numbers, you've got a couple of analysts bullish, a couple of analysts bearish. Current year numbers, you got one saying it's going to be great, you got one saying it's going to be not so great. So that's why you got a little bit of a mix here. But look at the magnitude of the mix. There's not much to it, right? These guys are only shifted by a penny or two because their overall Zacks consensus estimate has not changed if you're looking at the current quarter numbers. Over the course of the last 90 days, we've been stuck on 83 cents. If you look at next quarter's numbers, they've come down a penny from 63 cents down to 62. Current year number, 386 across the board, and next year's number from 428 down to 423, so fractional moves to the downside here. But don't expect too much surprise either on Tuesday morning, because if you look at the surprise history, last quarter they beat by 2 cents, a cent before that. This 12 cent and 10 cent here, I think this had a little something to do with the spinoff. So I'm not expecting a huge beat out of Darden here, okay? Not at all, and neither should you. All right, so we've set the stage. So now we're going to go ahead and dig into our options chain here and take a look at a few things. We're going to give you a bullish trade if you are, in fact, bullish on shares of Darden. We're going to give you a bearish trade if you are bearish shares of Darden. And again, I'm going to give my humble opinion as to which one of these I believe is going to be the trade that pays. Now, again, if you're not already signed up with us on Zacks Live Trader, you're watching this video on that channel here for free. But next week, our first stream, which is going to be Micron, is going to be behind the paywall here at Zacks Live Trader. So make sure you shoot me an email, livetrader@zacks.com, if you have any interest whatsoever in learning what that trade is going to be. And again, you're not going to be able to see any of the follow-up to these trade ideas if you're not signed up with us either. So make sure you get signed up. Shoot me that email, livetrader@zacks.com. We'll get you squared away. $9.99 a month. Again, it's a couple of lattes, man. Come on. Anyway, let's take a look at the options chain. So the first thing I do, as always, I look at the at-the-money call and put option. So in this case, Darden's trading just about 60-ish, right? It's a little bit over that, but that's okay. So we're going to look at this at-the-money call and put. This is in the front month, so October 21st expiration date. So all I'm going to do is take a look at the last trade here, and I'm just going to add them up. 210 plus the 135 here So that gives me $3.45. Divide that by 60. 5.75%. That's the move that we're expecting on shares of Darden. 5.75% on Darden. So that's what, 340? What did I say? Yeah, 340, 345. That's where we're at. Okay, now let's go ahead and clear this out. So if we're expecting that move, we're expecting about $4, $3.50. Okay, with shares of Darden now are kind of like $61. So that basically is going to put us sort of between, you know, $65 and $57. Okay, that's kind of where we think Darden is going to end up being. Of course, we do have options exactly at these levels. So we've got a $65 option and there's a $57.50 option. So keep those in mind. So if you believe that the options market is pricing this in, that may be the way to play Darden is, you know, just looking at those levels. Now, 5.5% move on Darden seems like it'd be pretty hefty to me. Just personally, I just feel like that's pretty serious stuff going on. So rather than being long premium into this, I think I want to be short some premium because I just think that number is a little too big, okay? And I could be wrong. Obviously, I've been wrong before, and we'll talk about that later. But so if I'm going to be bullish on shares of Darden, instead of being long a call spread here, I'm going to be short a put spread in this case. And again, guys, in the future, we're going to incorporate some other types of trades, but I'm trying to get sort of the basics across to you guys before we start talking about some other things, some other strategies. But right now, I want to be short a put spread on Darden if I'm bullish, okay? Short a put spread. The other way of saying that is I'm putting on a bull put spread, okay? Where that's, in this case, being that you're bullish and you want this put spread to expire worthless. So what I'm going to do is I'm going to take a look at the at-the-money put. So that's $60. And what I want to do with that is I want to sell to open that leg of the trade. Now, on most brokers, they have like an advanced options entry tab. That's usually where I do this. So rather than sit there and do this one leg at a time, you just kind of put it all on one page where you're gonna, where in this case, I would sell the 60 put to open. And then simultaneously, I'm buying the 57.50 to open, okay? So what I mean by that is I would sell this $60 put. I would take in $1.35 in premium, but then I would buy that $57.50, and so you'd have to subtract the 50 cents. So that means I would pocket 85 cents of premium, okay? Now what I'm gonna have at risk in this trade is the difference in the strike prices, which is $2.50, minus that 85 cents. So I'm going to have $1.65 at risk in this particular scenario, right? So if you're talking 85 cents with $1.65 at risk, I got the potential to make about 50% on this, 51.5% on this trade. Okay, so that's the bullish side of the equation. Now, let's go ahead and flip this thing on its head if I want to be bearish here, okay? So instead of, again, instead of being long a put spread and hoping it goes down, why not just be short a call spread? So flip it on its head. So we're going to do the opposite here. So let's look at the 62.50. So it's just out of the money, right? The 62.50 and the 65. Okay. Let me just draw this the right way, and I'll just get all this in here. There we go. Okay. So again, what I'm going to be doing here is I'm going to be selling to open the 62.50 call. So I'm going to take in 78 cents of premium. Let me just do 78. And then I'm going to sell to open the 65 call for 23 cents. So that's going to be a net credit of 55 cents here. And then again, I'm going to have $2. What did I do? I just blew up my thing. Sorry, guys. The 250, right, minus the 55 cents. So we're going to have $1.95 at risk, okay? So a little bit more money at risk. It's going to drop kind of my potential return on this down to 28%, right? But that's because it's a little further out of the money at 62.50 on the call, so I'm not going to be rewarded as much, okay? It's just that simple. All right, so you guys understand? Flipping it on its head. So if the bullish trade here is essentially shorting the bearish trade, right? So people who are very bearish on Darden would be long the put spread. They'd want the stock to go down. So if you just sell that to them, then you are inherently bullish. So selling premium, and the reason why I'm doing that is because I think the implied volatility here is a little bit more than it should be for a soup, salad, and breadsticks, okay? Now, in my humble opinion, which one of these trades do I like better, the bullish case or the bearish case? Keeping you on your toes, ladies and gentlemen. That's my Condor noise. That's right. It's not a bull. It's not a bear. It's death from above. It's different. This is what I want to do here, okay? I'm going to be kind of neutral on Darden. And essentially what I'm saying is Darden hasn't gone anywhere for months. And on the heels of this report, I don't believe Darden's going to go anywhere, right? So I'm going to sell options on either side of this bad boy in the hopes that it doesn't creep back above or below a certain level, okay? So what I'm going to do here that's a little bit different, and we can dig in, let's dig into this options chain here so we can see. I'm going to be short a couple of these, right? So if we look at here at the 65 on the call side, right? And then we look at the 57.50 on the put side. And sell both of those bad boys. So sell on either side of where this is. And I can even go, I can be safer and I can go to 55 even. I think that's what I'm going to do. I'm going to be a little bit safer. Let me do this again. So the 65 call and the 55 put, okay? So I can do that. So what I'm going to do is I'm going to take in that 43 cents of premium. So it's what I'm going to take in from the 65 and it's what I'm going to take in from the 55. And then I just have to hope that Darden doesn't rally above 65 or below 55 at expiration, and I'm going to get to keep all that, okay? Now, you may, depending on how you have your options account set up, you may have to do this iron condor style. So hence the sweet sound of the iron condor. So what I would do then is when I sold the 65 call, for example, then I would buy, you know, the 67.50 or the 70 just to give me sort of to define my risk parameters on the end of the trade, right? So I would know exactly how much money I have at risk. Because in this case, potentially the stock could skyrocket to 100 and you're on the hook for that short call. So this is something you kind of got to keep an eye on and make sure it doesn't start breaking out one way or the other and start running away from you, because it could get ugly in a hurry, right? Because there's potentially unlimited risk. I know that sounds frightening. So one way to avoid that situation is just by turning it into that iron condor. So by buying the 67.50 call and then buying the 52.50 put. So it's going to cut into how much money you're going to take in premium, but it'll also stop you from, you know, losing everything if Darden goes to a bazillion or goes down to zero, right? Granted, I'm being, you know, kind of over-exaggerating there, but just something to keep in mind as you're making your trading decisions on this one. So I guess overall, I guess the moral of the story is I'm kind of net neutral on shares of Darden. I'm trying to sell premium, take in money, okay, and in the hopes that this one pans out for me, okay? So Again, Zach's Live Trader Premium, people. I'm going to be right back. I'm going to go ahead and we're going to stand in front of that fancy TV over there, and I'm going to give you some advice on these open trades that we got going on. Again, if you're not signed up with us, livetrader@zacks.com. Make sure you shoot me your email address so I could tell you when these things are happening, so that you are ahead of the game. And the other thing is, too, we want to make sure you get signed up. But if you're watching this video, this is the channel where you need to be signed up on. So just click start your free trial, and let's get running with this, okay? Let's get rocking and rolling. So, again, thank you so much for coming out. I will be back on Monday, fun day, to talk about Micron. That's going to be behind the paywall, so make sure you're signed up with Zach's Live Trader, and I will see you guys after a fantastic weekend. Unless you're Zach's Live Trader, people, we'll see you right now. Thanks so much, guys. Take it easy.